Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how it is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, we're going to do something slightly different. I want to point out a couple of unique things that happened today in addition to the normal morning gap trades that we're going to discuss. So this should be an informative video and certainly something that any trader that's taken the course can take away something of value that they can learn from and use to their advantage in the future. So I do a couple of things. I teach a course that has two specific gap trading strategies found within it. The first one are the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity. And the opportunity for traders is when they can identify a specific price level where these stocks should first be drawn to like a magnet and then have a price reaction from in the other direction. We'll go over more specifics in a minute. The second part of the course are the gap fill trades. When stocks do gap higher or lower at the open, they leave what's called an open gap. At some point in the future, those open gaps will be filled. When they're filled, it creates another possible trading opportunity, but it all depends on how the stocks come in to fill those gaps, and that's obviously gone over in great detail in the course at Lazy Gap Trader. The other thing I do is give traders an opportunity to get my gap trades sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of today's email that went out to subscribers. As you can see, it came across at 9 o'clock a.m. Eastern Standard Time. Now today, there was 8 potential gap trades on the board today, and what we're interested in is stocks that come into the specific price levels that we calculate. And the reason is because that creates the highest probability trading opportunity we can find. If a stock does not hit the specific price levels that we calculate, we don't want it. It's not the highest probability trade we can have. So out of this list, only one hit its level today, and that's okay. Sometimes we get 2, 3, 4, 5. Sometimes we get 1, 2. It doesn't matter. What matters is we get high probability trading opportunities. We had a good week. We had a lot of trades this week. And so on a Friday morning, we get one trade, but it was a nice big ripper, so it's a good close to the week. The trade in question is Goodyear Tire, GT. Gap lower, support levels are $30.76, and then a secondary level at $29.23. Stop and profit target is about 25 to 40 cents. This is a minimum profit target. Let's go dig into the chart, and then I want to talk about a couple of other things that took place after the market opened. The other one that we're going to pay attention to is EA, Electronic Arts. You see where I say gap lower and support levels are 110.96, and then I gave 2 other levels from there. But this is one that we're going to talk about in a second because it became a gap fill trade. So pay attention to EA. We're going to talk about that one after GT. As you can see, Goodyear Tire closed yesterday up at $35.58, was getting murdered at the open, opening the day at $31.41 and traded lower. The level that we identified before the opening bell was $30.76. Now, what you'll note is the stock came very close to that level in the first candle of the day, making a low of $30.79, and then it bounced. And that does change the trade slightly. It's discussed in great detail in the course why that changes the trade. But nevertheless, I want to show you the power of these price levels. $30.76. The next 10-minute candle of the day made a low of $30.63, well within the stop loss limitation, and immediately ripped higher, and then just minutes later was making a high of $32.20 for a tremendous bounce, a tremendous rally off that level identified before the opening bell even rung. This is exactly and precisely what is taught in my course at Lazy Gap Trader. How to calculate these levels, how to identify them, and then how to trade them. Also in my course, I teach traders how to turn trades like this one into a risk-free, emotionless trade, and there's a whole video module in the course that discusses that exact strategy. Now here's Electronic Arts, EA. Very interesting trading opportunity today in EA. Now, full disclosure, I didn't take either of these trades in EA. I just wasn't paying attention. I didn't see it happen. But what I want to do is point out the opportunity that exists with this gap trading strategy. EA filled 2 gaps in one shot today. The level that was identified for the morning gap trade was lower than the stock went today. The price that I would have been willing to buy the stock at on a morning gap trade was 110.96. It never got there. However, what it did do was fill a gap at 113.97, and then it bounced higher. And then what it did was it filled the gap that was left open by today's gap lower at 117.60. So the stock filled a gap on the downside, and then it filled a gap on the upside immediately, and you can see what happened. Anybody that was paying attention was able to take advantage of at least one of those 2 opportunities. Most likely the one on the upside at 117.60. Now, what I said before was, when a stock gaps higher or lower at the open, it leaves what's called an open gap. And the open gaps are going to be filled at some point in the future. They could be today, they could be next year, but they will be filled in most cases, and this was a good example, and it happens a lot, a good example of how a gap got filled in the same day. And this is absolutely part of the course at Lazy Gap Trader. It is pretty phenomenal how this works and how the numbers play out over and over and over again. Now, there's one more thing I want to discuss, which is a little bit unique, but fits right into the strategy nonetheless. Here's a daily chart of Altria, MO. Big Mo, as it's called. Now, the stock was not gapping lower in the pre-market, so it didn't even come up on the radar screen. However, the stock started getting murdered after the opening bell and started trading significantly lower. And when stocks are trading lower like that, getting killed throughout the trading day, anybody that's taken the course at Lazy Gap Trader can use the same exact methodology to find the level where the stock will find support and bounce higher. You see on the screen the line running across at $61.93. That number was derived using the exact strategy and method that's used in the course for the morning gap trades. Now let me show you something cool. I want to take it down to a 1-minute chart. Here we are minute by minute. Watch what happened as the stock came into the $61.93 level. The stock made a low in that candle, that 1-minute candle, of 61.90 and immediately bounced higher. That minute closed the candle at 63.53, and that's off a level that was calculated using the same exact methodology found in the course at Lazy Gap Trader. This is all about mathematics. It works over and over again, and everything traders need to know in order to do this and calculate these levels is taught in the course at Lazy Gap Trader. This is a strategy that you can use each and every day to your advantage for the rest of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.